Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Matt, the lumberjack landlord. And yes, you can see he is getting ready for winter. He's got the winter look.
I do. Yeah. Yep. It's hats get itchy. So you got to just shave your hair.
I got it. These are things I don't have to worry about with, cold being 62 degrees.
34 was the waking temp this morning. So yeah.
Yeah. Yeah. I don't have clothes for that. No,
Yeah.
no, don't have it. Not in my wardrobe. Not in my wardrobe.
You awesome Californians don't have the blood for it.
Yeah,
That's
no,
the
I
problem.
I am soft. I am way soft.
No, it's just our we're used to it here. And so it's totally a used to thing. Yeah, it's just one of those, like, it's the same thing with hot weather. Like 78, I'm sweating buckets. I'm like, oh my word, this is oppressive, you know?
Well, you know what? Let's switch gears. You had a wonderful and passionate conversation with your channel the other
Yes.
day talking about the cost of crash videos, and it
Uh-huh.
it actually reminded me of a rant I had with some Twitter crash bro
Okay.
over the weekend. Let me just set it up, and then I want you to share the math.
Yeah.
So this individual who shall remain nameless, mainly because I've already forgot who the hell they were, basically was saying, Michael, you're wrong. Prices are already down. Median home price, I think, peaked nationally at, I don't know, call it 414. I believe last month was 389. Let's call it 390. And I've admitted that it came down more than I expected. So I owned it. But this individual was like, dude, you're so wrong. Crash video, this, that, the other thing. And I'm like, dude, you're right. They came down like 7%. And then I went dot, dot, dot. Interest rates up 1 point. So are you really ahead? Crickets. Right? People don't understand that you would have been better buying at 414 with a lower rate. And that's really what bothers me in all this is people are looking at the price, not the payment. People are talking about, what date the rate, marry the price, or whatever it is. It's like, guys, you're not doing math very well. I mean, what is going on? So I know you did something kind of off the cuff with your whiteboard. So share the details with folks.
Yeah, I mean, it wasn't so off the cuff because I actually had to sit down and go through all this data. But it's stuff that I read, so it really wasn't an issue. It was just like, I need to jot this down. And so one of the things that everyone knows that you and I are passionate about is the silliness of crash videos and everything being connected, not just one graph. And so all this data was pulled from national, sources, whether it was the, Fred or a number of other different places. But I wanted to share it with everybody because I think it's pretty relevant. And so what we start with up in the very top here is 720. So that's July of 2020. Median home 337, rate 3.07 gives you a payment of 1,433.
Yeah, and I want to be very clear. We had crash videos on some very well-known channels that have since been deleted talking about 2020 was the worst year ever to buy.
I actually use this date of 720, not arbitrarily, but I use this date of 720 because consistently it was where there were a bunch of other channels that started calling crashes. Many have since been deleted, but some still do exist. So let's just walk through it. So then we look at 121, January of 2021, 369. We start to see that uptick in values. 2.65 mortgage rate. It really kind of, that wasn't the bottom, but that was pretty damn close.
Close, yeah.
And then you've got 1,486 for a payment. So a little bit more than this, but you've got some appreciation, you got lower rate. And so we would generally call that flat. That's pretty
I'd call that a wash, yeah.
Yeah. But then we look at July. Now we really start to gain momentum. Now we're from 369 now to 382, if I'm reading that correctly backwards.
You are. Yep.
And then you've got 298. So now you've got an uptick in rate from where we were. You got an uptick in price from where we were. Now you're $1,600. All right. Generally speaking, does that extra $114, is that really making the difference between a buy and not a buy? No, not really.
Yeah, but I want to go back. So you're 1 year into this.
Yes.
The value's up about 45 grand if my math serves.
Correct.
Rate is basically even.
Yep.
Payments up from in a year, your payments up 167 bucks.
$67. Yep.
And again, we had crash videos screaming again.
Still crash. Yep. Yeah. Still crash.
Still a crash. Yep.
So now we go to 1 of 22. So now we're really starting to continue to gain momentum. January of 22, now that price is 433 median home price. Now you're at 310 for a rate. Now you're at 1848. Now it's an appreciable difference. Now we're talking about a $400 a month. Now you start to see people get disqualified because you're not getting approved based on this. You're getting approved based on this.
It's the payment. It has always been the payment.
It's always the payment. The price doesn't matter. The payment matters because that's what you can afford. If this were
that's
$10
what
million,
banks say no.
Exactly. This is what makes banks say no, not this. It's this.
Yep.
So then we fast forward to July, literally just 4 months ago.
Yeah.
July, you're now at 446,000, which is basically the peak for that price for median home price. You're at 5.3 for a rate.
So again, in 2 years,
these
crash videos have caused you to lose out on potentially $100,000 in equity. And now you are spending more than $1,000 a month. I hope you appreciate the value that crash videos brought you.
Yes. Keeping all these people on the sidelines, filling their brains with a bunch of stuff that they've been flat out dead wrong on. Now, my favorite is when somebody decides that they want to post, oh, looks like the crash guys were right. Does it really? Do I need to explain these numbers in an easier fashion to you? They're still not right. Are they going to eventually be right? I still believe a 10 to 20% correction is coming, but here's where you're going to get really hurt. They believe that the number is going to go from 446. They believe that this Q3 number is going to be down to 430. That was built consensus based on about 6 or 8 different data sources. So I kind of averaged them all out, and that's where it got to. Let's just say that's the number that happens. Here's what the current rate is, everybody.
And you think those are going down? Those are going down.
No, not going down. So we're at 6.7, and even some would call that a little bit of a light rate.
Yeah, it could be. It's going to be over 7.
For many, it's in the 7s, but let's just say it's 6.7. What's your payment now, Mike?
That's again more answers. Congratulations, you saved 16 grand. You still can't get approved.
Exactly. Even worse, they told you not to buy here. 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 You've spent 2.5 years renting. You've spent 2.5 years not getting tax deductions. You spent 2.5 years looking and waiting. What's it cost you? I will bet you that when everybody's said and done, you're likely, if you're still listening to those crash videos, you're another 2 years away or 3 years away from making a difference.
Dude, here's the deal. Crash video creators will never say the crash is not coming. They're getting paid to say crash. Why would they ever change? They're not going to ring a bell. You're never going to see a crash video go, oh, time to buy. That's not how they make money.
I think that they will flip the script. I think that they will hit the momentum. I think that they will, because the numbers, we will eventually bottom, but we sit, as you know, we sit along the bottom and bounce along the bottom. But the only point is here, let's just say, right, everyone, Mike, they want the prices to go back to 2020 levels. Let's say it's 2019 levels. Let's just say the prices go back to 337. Okay. Why did they go back to 337, Mike? Was it because the rate was maybe higher than 6.7?
Yeah, it's high. Well, I love this game. So that would be roughly a 20%, maybe a 22% drop. Correct. Let's just play with that, right?
Let's do it.
So what happens in the world to make that happen? First off, we have a nasty recession.
Yep.
Unemployment goes up.
Yep.
GDP falls. People are scared.
Yep.
Nobody's buying. You're not buying.
Nope.
You're renting. So,
yep.
Yeah, it's pretty crazy times.
It's just the numbers. And so I was sick and tired of constantly getting those things on my channel. Everybody's saying, oh, this, that, and the other. Listen, dude, do the math. Sit down and do math. Let me show you math. Because you know what? You want to argue with that chart all you want. You want to argue with the crash. You want to argue that this market's different and that market's different. I totally agree with you. We're the ones who always say real estate is hyper local. It is hyper local. And are there some places where you're seeing 10% declines? Yes, there absolutely are. I called 10 to 20% over the course of the next couple of years. Nationally, I think we still get there until or unless the government jumps in and starts making programs, which they're really good at doing. But at the end of the day, the numbers show what the numbers show right now, which is so far, the crash guys still wrong. Your house has done nothing but get more expensive for you to buy. Your payment has done nothing but go up and to the right. Your payment will do nothing but continue to go up and to the right. This is what's happening. You are going to lose years and years and years of asset appreciation. You're going to lose years of tax write-offs. You're going to lose years of all of these things just because you're trying to time the market and you still have no idea when that market number is going to hit that makes you go, now's the time.
Yeah, the big problem for me is the lack of wealth creation that's coming for people that didn't move when they should have. I just, if you, can you bring up your chart again?
Yeah, of course.
Let's take the second one. So let's pretend you got in late. Let's pretend it's January 21st. And let's say you're paying $1,500 a month. So not the bottom.
Yeah.
So tell me about that $1,500 payment. How often does that go up for the next 30 years?
0.
How often does your rent go up a year? Or how many times will your rent go up the next 30 years?
If I'm
times?
your landlord all the time. No, I mean
15 times, let's say every other year. Yeah.
Well, but see, here's the thing is, even if it's a lazy landlord, it's going to be every 2 because they're going to have to, because it's taxes being increased, services being increased. It's even if it's not every other year, it's probably every 3 years. And when they do raise it, it's probably not 2%, it's probably 10%.
So here's the last question. We'll wrap this up. Again, I just feel for people that watch these crash videos and frankly are still watching them. So again, this $1,500 payment, mortgage payment doesn't change. If you're renting, your rent goes up 15 times in 30 years, every other year.
Sure.
But hey, you know what? You're getting wage increases.
Sure.
Congratulations. I hope we have 5 years of 5% or more. So you're making a lot more money. If you're making more money and your mortgage payment doesn't change, does that increase discretionary income?
It would, but that's just math.
That's just math. And then if you are a renter and your landlord's costs are going up because of inflation and they raise your rent more than 5% and your wages only went up 5%, are you getting ahead?
You are not.
You're losing
every day.
So do you want to know why renters have a lower net worth than owners? It is very simple.
That's right.
Their debt's fixed and they take their increased earnings as you gain experience and age and all of this. You make more money, but your most expensive thing doesn't increase when you live there. It does when you're a renter. It's that simple. So people need to follow your channel. Mr. Matt, the Lumberjack Landlord. What is it?
Lumberjack Landlord on YouTube and Instagram, and then live streams Sundays at 11:30 a.m. Eastern time, where we get extremely passionate.
People love the passion, so keep it up.
Sometimes, yeah.